Well, greetings and salutations, test takers. This is the Series 7 Guru coming to you from my off-grid studio, getting our kicks on Historic Route 66 with an explication request. This is a Kaplan question. If you have an explication request, you can send it to explicationrequest@guruexamprep.com. I'll help you with any question, but if it's a Kaplan question, you just send me the QID 1521748, and I can pull it up backstage. If you don't have a Kaplan QBank, I highly recommend it as a paid supplement with my 15% discount code Guru15 at checkout. You can get it for a little over 50 bucks, 50 somewhere in that range, 55, $56. And you'll get all these performance opportunities. That's what I call practice questions. Today's request is Derp Corporation has issued 5% convertible debentures maturing in 2040. The conversion price is $40 per share. I can't stress this to you enough as a test taker. When given the conversion price, you need to establish the conversion ratio. I don't care what this question is going to say. We need to know how many shares it's convertible into. The conversion terms are based on par. So we take par, we divide by the conversion price, and now we're back in business. We have the conversion ratio. We can turn this bond into Derp Corporation, and they'll give us 25 shares of their common stock. Okay, now the common stock is trading at 48. I kind of like this question because it doesn't mention parity, but that's what parity is. It's equal, right? So even if they don't ask you to calculate parity, almost every convertible question, you need it to kind of answer the questions. All right, so if we can get 25 shares of a $48 stock, this bond, parity of the bond is 1,200. Parity means equal. This bond is worth or equal to $1,200 worth of the stock. So now the question is, what will we be willing to sell it for or buy it for, right? Let's say I own this bond. You say, hey, Dean, you can convert that into 25 shares. I say I can. The stock's 48, it's $1,200. If you want me to sell this bond to you, I'd want a little extra. You're asking me to leave a party early, you happen in party. I would want a little bit above parity. We would expect this to be trading above $1,200. If it was below that, if C was true, it wouldn't be anywhere other than in a testing fantasy land. But if it was, there'd be an arbitrage opportunity. Now, as a bonus question, they might ask you what is parity of the stock, right? So we said we could assume, and that's the answer to this question, they would be trading somewhere above 1,200. But let me just put a price to it and give you a bonus question. If we're considering buying this bond at $1,300, $100 over parity, what would we be paying the equivalent of the stock? And this would be called parity of the common, right? We just go the other direction. We divide by 25 shares, and that too could be the test question. And I'll just take 1,300 divide by 25, and we find out that 52 is what we'd be paying for the stock. Right now, the stock is 48, and so we wouldn't want to do that unless we had that expectation. So I'd be prepared as a test taker to do both parity of the stock and parity of the bond. And again, what that word means is that if you pay $1,300, I just made that up as the current market price of the convertible, CMP, what would you be paying it for the stock? You'd be paying the equivalent of 52. That's what parity means, equal to, right? So we're either going to go to multiply to get parity of the bond or divide to get parity of the stock. Both are very testable. Remember, inch by inch, parity is a cinch, convertibles are a cinch, yard by yard, convertibles are hard. I will link to a little video I have all about convertibles for you.